These next 48 hours are crucial for XRP and could very well change everything. And if you're an XRP holder and haven't capitulated or given up and have had the resolve to hold your bag at any point over the last few years, I believe it's about to pay off. And we've been in this exact same range for a period of about 589 days. The XRP community has been waiting far too long, and the XRP community has been taking too much flack and hate from other communities throughout 2024 because it's underperformed other cryptos. And just because they've had their glory day and they've gotten a lot of hype and attention doesn't mean that XRP isn't going to have its as well throughout 2024 because it's underperformed other cryptos that get a lot of hype and attention. But I believe that's all about to change, and in this video I'll cover the price action alongside multiple indicators that will clue us into how XRP is truly ready to explode. So you're going to want to stick around until the end, because I'll be sharing one key indicator that you can use simply to determine whether we're on the verge of a generational breakout or not. And the recent low of 49 cents may very well be the last time we see that price that low at any point through the rest of this bull market. In other words, it's up only. It also helps that the price action in the entire crypto market is really heating up upon the news of Trump's election. Since the lows on November 4th, the market has added a whopping $315 billion to its recent highs. And Bitcoin just put in a new all-time high. And this is exactly the type of environment we need to see for XRP to be good to break to new highs as well. However, the next 48 hours are crucial, and I'll explain why later in this video. I'll also be covering the Fed interest rate decision that will be made today, likely by the time you watch this video, and what that means for markets, and why one of history's greatest investors, Stanley Druckenmiller, believes that we are cutting rates too soon. So if you're feeling blessed and bullish, comment 777, and if you're going to be the wealthiest person in your family tree, be sure to smash the subscribe button. Let's get into the video. Before we dive in, a quick reminder that the opinions in this video are for informational and educational purposes only and do not constitute financial, legal, or investment advice. All investments, including cryptos, carry risks and potential losses. Always do your own research and consult with a licensed financial advisor. We are not licensed financial advisors, and relying on our content for financial decisions is at your own risk. By watching this video, you agree we are not responsible for any losses or damages, and we do not guarantee any specific results or outcomes. Some of the links below may be affiliate links, and we may earn a commission, which actually helps support this channel and helps us to create value-based videos like this. We also hold some positions in the cryptocurrencies that we talk about, but that's only because we do what we believe in. However, this should not be interpreted as a recommendation for you to do the same. With that said, let's get into the video. Hello and welcome back to the channel. My name is Paul if you're new here, and really quickly we're going to cover two things that have happened to markets and could potentially happen for the crypto markets based on the Trump election, considering even the Wall Street Journal tossed out there that the Wall Street elites and bankers and investors are salivating over a new Trump boom. Wednesday's epic post-election rally augurs big, lucrative opportunities, investors and analysts say. Now, it is pretty impressive considering that the U.S. stocks capitalization rose by $1.62 trillion just on Wednesday alone. This is their fifth best one-day showing ever. And actually, this is the biggest move ever the day after the election. And everyone from tech folks to investors and bankers are excited as they expect a departure of Alina Khan, who leads the Federal Trade Commission and has been a thorn in the side of executives hoping to work out tech acquisitions. Now, what makes this Trump presidency different than the first time around is the fact that he has a complete and total sweep of virtually everything in government, from the House to the Senate to the presidency, and even a conservative judicial branch. In other words, relative to the last Trump term, it looks like he doesn't have to worry about some congressional checks on his actions. And of course, he's not running for re-election. That gives him a great deal of scope to pick and choose which policies he wants. In other words, Trump can be a bit more bold in his actions towards saving the economy. Now, one of those major actions that's going to be different this time than the last time around around is the fact that there's currently a proposal being pushed that Bitcoin would be established as a strategic reserve asset and the government would buy up to 5% of Bitcoin's total supply. Now, I'm not going to get into this entire article, but basically what that would create is a complete and total FOMO event for the rest of the world. If the US announces that they are going to start to strategically buy and hold Bitcoin, you mark my words, virtually every other country in the world is going to want to do it. And when that news starts to break, not only will bankers, investors, institutions, pension funds want to pick it up, but virtually every single retail investor as well. This is going to be a bull run to end all bull runs. Now on to the Fed interest rate decision, which by the time you're watching this video will likely have already been announced. That said, we're currently sitting at about 500 basis points or a 5% federal funds interest rate, and the forecast is expected to be a 25 basis point decrease, which means it's going to be easier. It's going to lower the burden of borrowing on just about everyone in the economy and in the world. And many companies, if they weren't able to refinance their debt at that 5% rate, they might be able to do it at 4.75%. Now, when you look at the betting markets, there's about a 96% chance that we are going to get a 25 basis point rate cut. And even with all the bullishness from the election, the Federal Reserve won't alter its policy path on Thursday based on the recent election results and is all but set to deliver a quarter-point interest rate cut. However, when you look at someone like Stanley Druckenmiller, one of the best investors in history, he said he's a little bit worried. He said if there's a repeat of the 1970s, the inflation bottom would be right about now. And if anyone was back or alive around then, personally I wasn't, you'll remember that we had a second wave of inflation because we started cutting interest rates a little too soon. He said, I'm a little worried that the Fed has declared victory too early, and I don't have conviction like I had in 2021 that inflation was going to go up. That's when the money supply was growing 40% and all sorts of things were happening. But I also don't have conviction that they've snuffed this thing out and won the battle. And one thing you have to learn from people like Stanley Druckenmiller here is that they've built a really strong market intuition over many decades of experience. So people like him tend to be right more often than they're wrong, or if they are right, they're right bigger than they are wrong. And so at the end of the day, it pays to pay attention to people like this because guess what? That's what makes them rich. That's why they're legends. He said this, if we're going to have a problem, it's probably more like late 2025 and early 2026. And I would totally agree just based on the debt that we're in and based on how strong the market has really been rallying consistently through 2024 and now with the Trump win probably through 2025. So yes, all markets, right? What eventually, what goes up eventually comes down. All markets have a day of reckoning. They just might be a little later than sooner now. Now, I did make mention of the fact that the next 48 hours are crucial for XRP. And I would argue that XRP really has to start to trend to the upside and start breaking some ranges, considering, yes, Bitcoin and a lot of other cryptos are currently leading it yet again. In other words, XRP seems to be lagging. In other words, when you take into consideration the local lows back on October 10th of 2024, Bitcoin is currently up about 25%, while XRP is only up about 2.78%. Now, many people, and I'll just kind of drag that in there a bit, many people believe this is because, again, there was the appeal process from the SEC. There's a bit of overhead or sell pressure. People are capitulating, getting bored, selling their positions. You might even have some of those funds from the team they're using to pay for things. Who really knows? We'd have to actually look at the on-chain analytics. But Bitcoin is truly outperforming XRP, and there are other cryptos that are currently outperforming Bitcoin. So, in a situation like this where everything's rallied really strong over the last 24 hours, and as you can see, Bitcoin and XRP are moving in very similar fashion right now, you don't want to see XRP continue to lag while everything else leads. You want to see XRP start to break to the upside. So let's hop on over to the XRP chart and take a look at what recently happened. So we did have our lows here at 49 cents, and I did make a mention of the fact that that looks like a pretty good support between there to 50 cents, right? Because consistently we're getting these strong wicks to the downside on a daily time frame. Not going to dive into that. But then we also had a breakout for a double bottom, right? Where we touched this neckline right up here, if I could get a tool, okay? And then broke above. Now, typically in a situation like that, you you actually want to see some volume that's at least double or triple the size of the previous bar. And right here on November 6th, you can see that the volume was not as great, and then the volume really exploded on the breakout. So yes, that is good confirmation. When you look at the Binance chart, and I'll remove those drawings right there, you can see that the volume is yet again way larger on these moves and a breakout above this 52-cent range. So it is confirming that this move is legitimate. Now, a lot of the times on a 4-hour time frame or an hourly time frame, I like to take a 10 and 20 EMA, and that's exactly what I have here. And so when I get a break above a range, I have volume to support, and then I have the price above the 10 and 20 EMA, and consistently using those as a tool to basically buy supports and then into breakouts. This is a very good indicator that we are now trending. Again, the 10 EMA is this blue line, the 20 EMA is this orange line. Now, zooming out onto that daily time frame, you can see that we have not crossed over on the 10 and 20 EMA. So a crossover would be very healthy. Even if we broke right back down to that 52-cent range, that's something that I would want to buy on a touch right here of these EMAs, as well as when they cross over. But even from a daily perspective, you're starting to see volume really pick up and start to go above average. You're seeing bigger green volume bars, and for quite a while here, we are very stagnant and doing much of nothing. So notice right here now, we have a resistance right here at about 55 cents, right, to down to 54 cents. And when the volume really picked up and came into this range here, people took profits, and that's what caused this candle. But when I see these types of candles, as long as we close, higher than this previous bar, or even, no lower than the previous bar right here, we're good to go. So literally anywhere between 52 cents up to 55 cents, I'll be a very happy camper, because the volume is confirming to me that this is a strong move. Now, what's super interesting, okay, is when you take a look at the wick right here, you can see that we had a lot of resistance in this range. So I'll try to clean up the chart a little so you can really see it. Okay, you'll notice how right here, right, what used to be a support at 57 to 58 cents was now a resistance. However, with this double bottom, with the pickup in volume, with the market looking really hot, I think we are primed to go right back up to that 50 or 62-cent range is really where we need to break out before we start to make some major moves to the upside and potentially break for some new all-time highs. In other words, the next 48 hours, as crypto and Bitcoin start to move, XRP, I would argue, does need to get back into that 57-cent range. That's what's crucial, because if it can get into this 57-cent range, hold it, it's highly likely to go up here. Now, another tool I use for confluences, okay, is that VRVP. And when I use the VRVP, it's basically going to show me where the majority of volume has traded in these ranges. So I'm going to take that, pull it down. I'll leave these two lines here, and I'll leave this line right up here. And you can see now that the VRVP is giving me some samples of where the majority of volume has traded for the visible range of candles. And the majority of volume has traded at the 52 to 53 cent range. So I'll go ahead and put a box right there. Okay, and then the majority of the rest of the volume has traded right here at 60 to 58 cents. Interesting. We're currently in this range right here. However, we've bottomed out here, and it looks like the volume is telling us a story. It's telling us it wants to continue to move to the upside. So yes, we do need to break above that 57-cent range, maybe hold it for a minute. We might chill out here for a sec, but once we get to that 63-cent range, this would be the 6th time we've touched this range. The more that you touch a range or a resistance, or it's kind of like knocking on a door. The more you knock on a door, the more likely eventually it's going to open. So they become weaker and weaker and weaker the more you knock, essentially. So I'm very confident that 49 cents, unless we get some sort of a major black swan event, or some sort of a new assassination attempt, who really knows what's going to spook markets. Right now, they really look like they're primed to rally. I believe 49 cents was the low through the rest of the year, and I am currently adding to my portfolio right here. Now, when it comes to the indicators that I wanted to share, and one very easy indicator to take a look at to verify if we are truly in a new bull market move, I'll share with you in a second. First, we're going to hop on over to the stochastic. Okay, and so on this stochastic, If you toss it on a weekly time frame, okay, first and foremost, volume is still declining, so we want to get a breakout with volume above that 64-cent range. That would be tremendous. In other words, the volume on a weekly needs to look something like this, okay? But what I love about the stochastic on a weekly time frame is the fact that you can see right here when we crossed over the slow moving, crossed above the fast moving average, or the orange line crossed above the blue, right? Things continue to trend down. We chilled out for quite a few weeks here, about at least a month and a half, and now for the very first time on the lows right here, and I'll really kind of dive in there, you can see that we're crossing over yet again. And so right around here, okay, things are looking really good for the market to start to trend to the upside. You'll see the last time that happened right over here, things started trending up from a low at 41 cents all the way up to 65 cents. So that would have been a good little take profit for you, or better yet, just some profit for you. But things are looking really good from a stochastic. So now we have this confluence of all of these major factors that we just shared with you. Yes, I am very bullish on XRP right now. However, I'm going to remove all of those indicators and I'm going to pull up a Bollinger Band. Okay, so for those of you guys who don't know what that is, you can just type in Bollinger on TradingView, and that's what it is, Bollinger Bands, and you can keep it at the base settings. Now, I'm not looking at a weekly time frame, although what's really interesting is we are really tightening up for a period of a very long period of time, I should say. But I'm going to look at that daily time frame. And basically what this is kind of like a squeeze indicator. Okay, we're talking standards of deviation. Things act like a magnet. Whenever you touch the upside, you can see it's like a magnet up here. It continues to hold and then it breaks down. This strong deviation leaves room for people to say overbought and oversold. However, I don't like to trade it like that. What I'm really looking for, okay, if I put it on a log scale and then zoom out, you can see that there's these massive deviations. And actually, I'll pull it up on this chart, which has more history. You'll see that there's these massive deviations when the price really starts to pump hard. And it continues to hug the upper range for quite some time before breaking down. So you see the distance between these ranges right here. When you really start to see a breakout above a resistance like this, so see this right here, breakout, breaking into this range, don't sell something like that. You typically want to buy something like that, especially, and I'll go ahead and pull that volume back up, if volume, look at this, is confirming that move. Notice how volume is way larger right here, and the candle is really large. As it's touching the upper range, you can thoroughly expect that the market's going to continue to rally in that direction as the Bollinger Band continues to widen. And when you look back in history, we'll go even further back, yet again back here, you'll see the same exact thing happening. Now, here's what's funny is on this volume, right, it's really hard and not noticeable. I'm trying to make sure that you can see it, but look right here, huge move, break into new highs for the range, and then look at how the volume really increases through this range as it continues to hug the upper portion of that band. And then look at how wide these bands get here. You really have to zoom out to see it. So this is a confirmation that the move is really legitimate and true, volume and Bollinger Bands. So this is what we're looking for. Now, right now, we haven't experienced it. Notice here, here, and even here in 2018. But look at this. We experienced it one time slightly in 2021 when the bull market was happening. We have not experienced it yet this year. So I'm actually getting pretty excited because if we break above, realistically, I'll just give you this entire range. And I've been sharing this since day one, right? Right here from 74 cents to 64 cents. Okay, if we break out and we get a move above right here and we start to hug that upper range of the Bollinger Band as it continues to widen, the volume confirms it. You know what? It's smooth sailing. We are going to new all-time highs on XRP. But for now, the next 48 hours are crucial. We want to see XRP get back into that 57-cent range. That would be very big because it's going to take us into the range we actually need to break above. So there you have it, folks. I hope you learned something, and if you did and you enjoyed the video, be sure to smash the subscribe button and like the video. It really helps us out. And also be sure to go to bullrunners.com. The link is in the description below. This is a way to join the early bird list and reserve your spot because time is running out and we can only accept so many people. That said, if you don't join within this time frame, you're not going to get some bonuses. So this is a great way for you to get exclusive altcoin picks, market analysis, and access our crypto education platform and inner circle. We're super stoked about it. We're ready to launch here very shortly. So again, one last time, go to bullrunners.com. Be sure to subscribe. I look forward to seeing you on the other side. Thanks so much for your time, friend. Goodbye.